Hello, this is Greg Maxwell with Amicus Settlement Planners. Occasionally we'll get phone calls from attorneys who are involved in a taxable damages settlement. Most of the calls we get are for personal injury settlements that are based on a personal physical injury, but every now and then we get calls for a taxable damage type case, so a contract case or a defamation case or some other kind of case that is not based on a personal physical injury. And so in those types of settlements, the client's recovery is not tax-free like it is in a personal physical injury. And so a lot of times those clients are facing really huge tax consequences as a result of the settlement. And so there are things that we can do at the time of settlement to help mitigate the tax liability for your clients. And so just to give you an idea, sometimes there's what we call non-qualified structured settlement annuities that allow the client to put their settlement into, at least a portion of it, into a non-qualified annuity, meaning a structured settlement annuity that pays them out over time, which means they're not taxed on the full amount at the time of settlement. They're taxed as those payments from the annuity come in. So it could potentially move them from the highest tax bracket, if they were to pay it all in 1 year, to spreading it out over several tax years, lowering the total tax that they end up paying. There's also some really innovative trust options that are being developed or have been developed that we can discuss with you if you give us a call. So, if you have a taxable damage settlement, your client's going to face a very large tax bill, and especially because of the Trump Tax Cut Act that was passed. Essentially now they are also taxed on the attorney's portion as well as the net amount that they receive. So that wasn't an unintended consequence of that bill, but that is something that we're having to work through. So if you have a taxable damage case, give us a call and we can really help your client save a lot of money on taxes, potentially with the use of some of these strategies.